My in-laws put my name on their mortgage without telling me. They added me as a co-borrower while I was at work, signed my name on documents I never saw, and then told me I was lucky to be allowed to stay in the house I thought I shared equally. It was betrayal by paper, quiet, bureaucratic, almost polite, but the effect was violent. When I found out, it wasn't some dramatic confrontation. It was a call from collections and a notice in the mail. It was a polite woman at the bank telling me my credit score had dropped because payments were late. Hearing my name on a loan I never agreed to felt like someone had moved into my life and redecorated. Everything familiar looked wrong, owned by someone else. They were Ruth and Dan, my husband's parents. They lived 3 blocks away from us in a tired and brick 2-story on Maple Street that had once been my in-laws' pride. The house smelled of lemon oil and old coffee. I had dated their son, Mark, since college. We married 5 years later. For the first 2 years, we lived with them because work was tight, because Mark's job transferred him temporarily, because we were, as everyone said, saving up. I waited tables at a diner in the next town, 12-hour shifts, 2 nights a week, and a morning shift on Sundays. The pay was small, tips unpredictable, but the job let me write in the quiet between customers and pay the student loans. Ruth and Dan were generous in appearance. Dinners, advice, a lawnmower they lent us for weeks at a time. In practice, their generosity carried strings. They paid for house repairs and pretended it was no big favor. They helped with groceries and then kept receipts. They insisted on overseeing bills because they said we were young and impulsive. Mark, who had a steady but modest salary in logistics, deferred to them as he always had. He called them in the evenings too, habit, duty, or maybe fear of setting them off. Their relationship with him was a kind of corporate hierarchy. Ruth as CEO, Dan as COO, Mark in middle management, and me, a low-level contractor in their view, forever temporary. The inequality was practical. Their social security and pensions covered the big things. Mark's salary covered utilities and some groceries. My tips paid for clothes, a few dinners out, and the modest IRAI started. We signed a lease for the upstairs apartment over their garage when Mark's transfer became permanent. It was a 1-bedroom, cramped but ours, and the mortgage on the main house remained in their name, and that was the line they drew between their money and our money. They told me more than once that people like me should appreciate what we had. Broke waitress, they called me to their friends when I wasn't in the room, and I heard the phrase once in passing at a barbecue like a knife left in a drawer. It stung. It also made me quieter. You accept insults better if you think you can't fight back. The first real pressure came in the form of small, persistent manipulations. Ruth would forget to mention when a payment deadline was approaching. She'd say something offhand like, "We're heading to Vermont for a week. Can you make sure the mail's collected?" I would bring in their mail and find a pink slip from the water company. Or they'd misplace a receipt and expect me to cover it. Once, Dan called at midnight about a clogged furnace and said, "We can't afford a repair right now." Mark gritted his teeth and suggested we split it 3 ways. I took the extra shifts, wrote checks without marking which dollars were mine, and kept the ledger in my head so I could sleep. Then they started to escalate in a way I didn't see coming. It came as convenience chats that became commands. At first it was, "Could you watch Gran this afternoon?" And then, "Could you move your stuff into the spare room?" And within a year, "We think it would be better if you didn't work nights anymore." They framed everything as concern for me and the household. Except when I refused, the tone would shift to disappointment. Ruth became a thermometer of my behavior. If I resisted, her voice would cool and she would tell Mark quietly that I was ungrateful. Mark, caught between his parents and me, would apologize and say he needed to keep the peace. The forgery happened slowly. A mortgage company called because a required document had not been returned. I picked up a letter, a single line in terrible legalese, saying that the bank had accepted my signature on an updated mortgage rider. I didn't recall signing anything. I called Ruth, who laughed and said she must have taken it with her when she did the taxes. Dan said, "We asked you to initial a page when you were here." Mark said nothing at all. The bank said they couldn't release copies without consent. They said I could file a dispute. I filed one. Then the payments were late. When I called Ruth and asked why my name was on the mortgage, she said, "You live here. It makes sense." She made it a question of logistics, like I had agreed to move the washing machine into the kitchen. But there was a deeper sting. They had taken something legal and turned it into a weapon. They had reclassified me from family member to financial co-owner without the decency of telling me. It hurt because it felt like a vote had been taken without my presence. It hurt because their contempt finally had a paper trail. The first escalation loop began immediately after that. New betrayal. They used my supposed status as co-borrower to demand more of me. "Now that you're on the mortgage, we expect you to contribute more," Dan said, adding that it was only fair. My reaction was practical. I worked extra shifts and refused to let them see me flinch. Consequence, my savings started to shrink as I covered late fees and split repairs that had been their responsibility. The situation worsened because the more I gave, the more they assumed I could give. Payments still fell behind because Ruth liked to buy what she wanted and Dan refused to stop her. At family dinners, they sniffed at the charity of friends who suggested we go out, as though our lack of wealth made them noble. Every small push was a test. They tested how much I'd bend before I'd break. Once, at Thanksgiving, Ruth announced she had taken our name off the deed to the garage because it made bookkeeping easier. Mark didn't say a word. I realized then that my legal status had been toyed with for months. I tried to talk to the bank again and asked for a full mortgage ledger. The bank said they would mail it. The ledger arrived with months of missed payments marked in red. There were charges for landscaping and for consultant fees that made no sense. When I asked Ruth, she said it was housekeeping, and Dan muttered that she handled the contracts. The second escalation loop involved lies and exclusion. New betrayal. They told extended family we were irresponsible with money, broadcasting our domestic problems as proof of bad decisions. My reaction? I tried to correct the record, to explain calmly that something had been done without my consent. The consequence was social humiliation. Family members avoided lending me support. Friends who knew me as steady and quiet began to fall into the rhythm of the in-laws version. The situation worsened because their narrative stuck. It's easier to believe a tidy story, daughter-in-law overspends, and parents bail her out than messy reality about signatures and forged initials. The more I pushed back, the more everyone I had trusted seemed to retreat. I found myself policing my own emotions so I wouldn't feed their narrative. Financial pressure increased. I began cashing out the IRA. I'd opened piece by piece, each withdrawal a small surrender. The bank started calling daily. The late fees multiplied. compounded by the petty fees Ruth seemed to add, filing fees, administrative charges for a bookkeeping service she invented. In truth, most of those charges were her invoices to herself, an internal accounting she'd used to justify spending on a new kitchen tile pattern. She told me the tile was an investment. Dan called it aesthetic improvement. To me, it was theft disguised as renovation. Beyond money, there was humiliation. They would invite people over and leave the upstairs door open as if to show me their wealth while letting me clean around it. Ruth called me sweetie in a tone that made me smaller. At family meetings, so-called strategic talks about the house, they excluded me from the table. Once, when I tried to sit, Mark cleared his throat and said I should wait in the kitchen. The meeting lasted 3 hours. They decided, among other things, to refinance, taking advantage of a lower rate. They claimed refinancing would free up cash to pay their taxes. When the paperwork arrived, my name was there, like a ghost. My reaction became quieter, more surgical. I tracked every dollar I had left. I set up an envelope system for rent, utilities, groceries. I worked 3 jobs for a few months: the diner, a shift at a coffee shop on weekend mornings, and a remote gig doing transcription. I kept my face calm and my words bland. When I paid them a portion of the mortgage, Ruth thanked me in a clipped way and then told Mark I was finally pulling my weight. The consequence of my compliance was not gratitude, but more expectation. Their sense of entitlement grew, and they tightened the screws. The third escalation loop brought threats. New betrayal. They threatened to sell the property if I didn't pay. At first, it was a throwaway comment from Ruth, but the tone was turning. She said, "If the mortgage keeps slipping, we might have to downsize." Dan added, "We could sell and split the proceeds. You wouldn't have a claim." That threat was aimed at removing me altogether. Strip me of home and security in one transaction. So my reaction was a brittle mix of disbelief and calculation. The bank had records showing me as a co-borrower. The deed still displayed some ownership language. I began researching mortgage law late at night, reading state statutes and forums about quiet title suits. The consequence was a spike in anxiety and a tightening of my social world. The situation worsened when a realtor visited the house under the pretense of appraisal for insurance. I watched Ruth smile and offer coffee while the realtor took notes. They seemed seduced by the idea of an exit in which they were blameless and I was collateral. I kept thinking of the moments that got us here, small permissions that became permissions to act without me. I remembered signing a spreadsheet they had handed me for utilities 1 year earlier, initialing a blank spot. I remembered bringing a neighbour's casserole to a block party and Ruth remarking that I was so domestically capable for someone who works nights. It's a dangerous thing to have people decide your story for you. They depicted me as someone who would always say yes because I owed them for the roof over my head. I did owe them in ways I couldn't deny, but I had not agreed to be erased. Then the low point arrived like a slow, clinical wound. The crisis that made everything feel irreversible happened in late February, when the bank sent a second notice, not a polite letter, but an intention to accelerate the loan. It was a sentence that meant, "We are moving toward foreclosure." I remember sitting at the kitchen table with a packet of documents spread out, a dozen notices, a bank statement, a copy of a mortgage rider with my name scrawled on it in a handwriting that looked like a hurried grocery list. My hands were cold. The ultimate loss was not of property yet, but of leverage. Mark, who had been my partner, began to drift in the way of someone who no longer knew how to choose between two entrenched forces. He told me he needed to talk to his parents alone. When he left the house that night and closed the door, I sat on the couch and listened to the creaks of the floorboards, imagining they were the world shifting. I felt abandoned. The quiet in the house throbbed with meaning. At that point, I could have left. I could have packed a bag and moved into a friend's guest room. But leaving would have been surrender too, acknowledging that the in-laws had won the house and my dignity. I had little leverage and dwindling finances. I was, in the most technical sense, trapped. I felt like a tenant in my own life, and the idea of walking away felt like forfeiting a right to be heard. The turning point was, of all things, a mistake their accountant made. It was a small error in a reimbursement check attached to a stack of invoices. Ruth had given the accountant a bundle of lawn service receipts, one of which was stamped by a small private lending company. I opened the envelope because I was trying to find anything that could explain the sudden jump in household corrections. The stamp on the invoice had a routing number and the name of a company I didn't recognize, Harbour Bridge Financial. It was a local note purchaser, a small firm that bought mortgage notes from banks. The invoice total aligned with the amount left on their mortgage's principal, give or take. I didn't understand it at first. Then I called Harbour Bridge. What I discovered in that phone call shifted everything. Harbour Bridge didn't hold the mortgage because Ruth and Dan had sold it. Harbour Bridge held a second mortgage note attached to the property as collateral, and in their records, the primary mortgage was now in their ownership because the bank had packaged the loan but then sold off certain obligations. Harbour Bridge told me the mortgage servicer had an open complaint because payments were missing. They said in a flat voice that the note was negotiable and that in certain circumstances, the holder of the note could agree to a private payoff. It sounded abstruse and calm, paper shuffling, but the sentence lodged in me, the note was negotiable. I took that fact home like contraband. To them, it might have been a ledger entry. To me, it was leverage. If someone with ready cash paid off the holder of the note, they could step into the bank's shoes as creditor. It was technical, it was legal. It also gave me a path where there had been none. The next part was practical. I had to get the money. That is a mundane detail that requires honesty. I did not have enough cash in a checking account. What I had instead was a modest inheritance from my grandmother, a sum she had left me years before, something I had tucked into a broker account and used for small, safe investments. I had never told anyone about it because I had never needed to. It sat in an account, not enormous, but substantial enough to change a mortgage dynamic if applied correctly. I had also been part of a co-op that owned a commercial rental unit downtown. My share was small but liquid. Over weeks, I liquidated investments with slow, resigned efficiency. I sold the small rental share, withdrew the IRA funds I had left, and closed the low-interest savings I had meant to use as a rain fund. Friends would later say I had suddenly come into money, which missed the emotional truth. I had not suddenly come into anything. I had been patient and careful and uncelebrated. I had choices because I had saved, not because I'd been given a windfall. I talked to Harbour Bridge again. I hired for the first time an attorney who specialized in mortgage notes. He was a small, calm man who asked blunt questions. He said the rumor of selling a note to Harbour Bridge meant they had leverage if they acted quickly. He told me what the bank wouldn't. If someone held the promissory note and paid the holder, they became the new creditor. If the new creditor wanted to restructure, they could. The math was clinical back of envelope stuff. Purchase the note, become lender, and then either foreclose or renegotiate. I remember feeling my chest tighten at the words foreclose and renegotiate. Those were the two blunt instruments a creditor could use. I did not want to foreclose. I wanted to reclaim my home without turning it into a spectacle. The day I called Mark to tell him what I planned was the quietest conversation I had ever had with him. He listened, and in his listening there was resistance and a sudden clarity. He asked me if I was sure I wanted to do this. He said buying the note would change everything. I said I knew. He said the parents would feel betrayed. I said they had already betrayed me. He said they gave you shelter. I said they gave me a name on paper and calls from collections. Something's changed. I made the offer. Harbour Bridge, to their credit, was a business. They answered to their own shareholders. They accepted a number that was below the principal but above the current market's expectation. In a week, through a wire transfer and a quiet stack of signatures, I became the holder of a portion of the mortgage note. I didn't shout it from rooftops. I sat at my kitchen table, hands stained with coffee, and signed my name on pages that were once used to erase me. The feeling was odd and sober, like turning the lock on a door that had been broken for years. There were immediate consequences. When I called Ruth to tell her Harbour Bridge had sold the note and that I was the new assignee for the arrearages contract, the voice on the other end changed. There was a warble of confusion that sounded animal in it. She tried to laugh and then to insist she'd been joking. Dan, when he learned, sent terse text messages about legal counsel and unfairness. Mark avoided both of them and me for 3 days, which was punishment and protection all at once. The new power dynamic was not cinematic. I did not march through the house waving legal documents. I did not throw them out or humiliate them. The law allowed me to call for a meeting, to show the relevant pages, to ask for an accounting. I did that. I asked for receipts. I asked for proof of repairs. I asked that any payments due be directed to my account. That is the pragmatic, unromantic part. I had to become the responsible party. I had to watch the books with a new coldness. One by one, the charges they had invented were exposed as their ingenuity. Some were legitimate repairs. Some were Dan buying a new bird feeder and charging it to landscaping. I demanded an explanation for each line item. They complained, of course. Ruth accused me of being petty and said I was turning into her mother. They said I was trying to embarrass them in front of the family. I said I was trying to stop the house from being a place where money was siphoned away by false accounting. What followed were consequences that felt both satisfying and ordinary. They stopped calling me broke waitress in company because now I was a creditor who could make demands. They were careful not to mention the notes at dinner. Mark began gradually to sit opposite me again at the table. He didn't apologize in a way that mattered. Apologies were not what I wanted. I wanted clarity. I wanted the ability to breathe without the hum of the bank. There were awkward conversations. Ruth told me she felt betrayed, that I should have told her I had savings. Dan wanted to invoice me for emotional labor as a joke that landed flat. I insisted on a transparent ledger, co-signed by an accountant they selected together with me. They agreed because the alternative, An expensive foreclosure proceeding was worse. We restructured the payment plan. I set up a schedule that made pragmatic sense. I offered them an opportunity. We could, as a family, consolidate the arrears into a fair repayment plan with reasonable terms. Or I, as the holder of the note, could pursue a sale. They chose the plan. Mark agreed to pay more from his salary. I allowed a small rent to be credited if they took it in lieu of cash, because I did not want to be their landlord in the punitive sense. My goal had never been retribution. It was to remove their unilateral power to alter my life. There were losses. I had drained years of careful savings to make the purchase. My IRA took a hit. My peace of mind had cost me dollars. There were also ruptures in relationships that didn't stitch back together. My sister-in-law, who once brought casseroles, stopped inviting me to her birthday parties. My mother-in-law's smile never reached her eyes at family events after that winter. Sometimes Mark slept on the couch when arguments flared. There was no neat moral of justice served. People adjusted. The garden got replaced with less expensive plants. The house's roof got repaired properly, and I argued for a durable shingle rather than Ruth's preferred expensive cedar shakes. In small, administrative ways, life resumed a new normal. It is important to say what I did not do. I did not punish them beyond the paperwork. I did not demand a public confession. I did not force them to move out. I did not spend their money frivolously to prove a point. I also did not shrink. I began to make decisions that served my household and my sanity. I started a small emergency fund again. I cut back nights at the diner and moved into a steadier remote position full-time. Mark found his footing too. He set up direct deposits to my account for his portion of the mortgage. We spoke less in accusations and more in figures. The most unexpected consequence was the way neighbours began to act differently. Where once I had been a face who took grocery bags to the car, people began to call me by name, ask me about the town council, about the school district. The town has a way of noticing power. When a woman who had been assumed financially weak steps into the role of creditor, people adjust their mental maps. That change felt small and slightly absurd, but it was real. It taught me the difference between public reputation and private truth. The ending of that arc was calm. The bank never foreclosed. And Ruth and Dan kept the house for several more years. They paid the arrears slowly and begrudgingly, and the house remained a place where family dinners still happened, though with a new stiffness. Mark and I did not divorce. We did not have a great reconciliation scene. There were months of terse civility and then a gradual quiet thaw. Over the next 2 summers, we refinanced on fairer terms as a family, with proper counsel and transparent ledgers. I became someone they consulted rather than someone they decided for. That was the payoff, the restoration of a voice in affairs that touch my life. There is no neat cinematic revenge. There is only the labour of repairing the practicalities of a life that had been mischaracterized. I bought a mortgage, and that bought me something far less tangible than land. It bought me the space to negotiate my place in a family that had tried to define me away. I paid for that space on the backs of savings and small humiliations, but I also reclaimed a sense of agency I had never expected to spend. If I'm honest, I still think about the way Ruth once called me a broke waitress at a barbecue. I remember the deep quiet after Mark closed the door the night he chose to speak with his parents. I remember the relief and guilt that arrived in odd pairs, relief that we had leverage, guilt for spending my grandmother's legacy on something that would have only been a financial repair if I had been left alone. The ledger of emotions reads like the ledger of the house. Entries of taking and giving, a running balance that is never fully reconciled. Now, when the mail comes and I open envelopes, I know which signatures are mine and which are not. I check the statements for odd charges. I sit at the table and listen more often than I speak. There is a quiet strength in being careful with your words and paperwork. I still work, though less at night, and I still keep close track of my accounts. I do not call Ruth to ask permission to breathe. If you want the blunt truth, buying their mortgage didn't fix them. It fixed my ability to say no without fear. It forced them to behave like adults who had to answer to someone beyond their own appetites. The scars remain. Our family dinners have edges. But I can make decisions for our household now, and when I make them, I do so without a tremor of being erased. If anything in my story resonates, or if you've seen similar quiet invasions by paper and polite people, tell me in the comments. If you liked listening, please leave a like and consider subscribing for more stories. What would you have done in my place?